Hello, everybody. Welcome to the Closing Beat. Happy Wednesday. It's Wednesday already. My God. Hope you're having a great day out there. We are financial advisors here at Jazz Wealth. Getting over stuff here. Still, I sound bad, but I feel fine now. You know, back to work. I do see you there, Dennis. I owe you one, two, probably in that case. Playing a little bit of catch up around here, and it's going well. I'm actually, getting caught up, feeling good. Got my mind right again. Happy to be here with you guys. We are financial advisors for people who don't think they can have financial advisors. Check us out at jazzwealth.com. Not just retirement planning, financial life planning as well, huh? That's a nice way to say it. We also have lines of credit available for clients, brokerage accounts, and our high-interest savings account currently paying 5.25% with no fees, attachments, or anything like that. Clients currently trust us with over $400 million, so growing little by little out there. We got a wine and wealth class every Thursday for you guys out there. We've done our March financial focus. We did Roth contributions top to bottom. The bad news is there'll be no show tomorrow. I got a real treat. Never in my life have I seen this guy. You jazz people out there? Pat Metheny. Pat Metheny coming to town, get to see the man. Pretty cool. I don't know if you like the guy, if you don't know the guy, look him up or something. That's a real jazz treat for me tomorrow. So there'll be no show as I go on off to see a living legend apparently there. Hey, let's talk about the stock markets here today. Fed Day. We talked about this the other day, right? Not going to be a thing, right? Nothing's really going to change. Actually, while I'm here, let me see if I can pull it up. That's pretty much what happened. Remember we talked about the focus was going to be on the dot plot, right? So they call it the dot plot. Yeah, that's the whatever, officially it's called the Summary of Economic Projections there, if it's something you're interested in looking at. They actually published it. Let's see if I can pull it up for you here while I'm looking, because, oh boy, it's not exciting to look at, but here we go. We're going to take a look just real quick, and then we'll get into all the goods over here. This is what it is. This is the newest one, blah, 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 blah. Ah, there it is. That's the dot plot. So all this is, to break down something that is just so boring and dry and stuff, these are the voting members of the Federal Open Market Committee. It's a separate committee inside of the Fed, and basically they're the ones that, they have their thoughts, what they think rates should be, where they, when they should be there. All this other stuff is just where they see various economic indicators that they follow going and kind of illustrates like how did they come to that decision. Anyways, everybody's looking at this thing here, right? So think of it like this. The more dots, the more people that believe rates should be there. All we didn't want to see was some of these dots go up here. That's all. That's everything. That's the dot plot, right? So we're here, and basically what this tells you is 1, 2, 3 quarter point rate cuts is where the majority of voting members who would win in the voting, what they do there, see rates being at the end of the year. So when you watch TV and they're like, oh man, there's going to be 3 more rate cuts this year. Maybe not, For the moment, that's what they think. So then you look forward and you go, ooh, it gets a little more unclear into 2025, right? We've got some indecision here. This is going to change. I promise you it's going to change. Going forward, more indecision. Most people would like to see rates back down to a very low level as we get into the longer term, combat inflation, blah, 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 blah. So if you're looking at the dot plot there, or the Summary of Economic Projections, I don't know why they call it that. Nonetheless, you see no change. That's important. That's what we were looking for today. We were looking for, in particular, small cap stocks really like to see a stability in rate decisions. They like to see no change at all, for being honest there. So yesterday, we come into the stock market, it's like nobody cared, right? You started off, sold off, excuse me. Proof that I'm sick. It was sold off a little bit lower, obviously finished the day higher. We got 18 record closes for the year. Today will mark the 19th record close because today we go, oh, hey, the Fed didn't say anything new, different, exciting, scary, nothing. They just kind of said, yeah, we think this, we have thought this, and we continue to think this. That's it. Stability. The stock market does not like, a great example would be around election season. Inevitably, one side will pick on healthcare. It's a real hot button topic, right? So when they start picking on healthcare, what do you think happens in the healthcare sector? Just crazy, right? Because we don't like the unknown. The stock market likes to project out very stable futures and understand, this is where we're going to go. So we now have confirmation the dot plot says that. Hopefully that wasn't too boring for you. I find it interesting, but that's what you got. So We go over to the stock market. We continue to be in this clear, consistent, overbought, but clear uptrend there. We've got our 19th record close of the day, or of the year. 15% of the S&P today made new 52-week highs. That's kind of a high number, but it's, it's creeping up there little by little. I do want to point out some charts for you because some of you like to look around, build your watch lists and all that good stuff. Let's do it. Let's have some fun. I'm not telling you to buy these stocks. I'm just giving you examples of what we see. So Dr. Horton in the home builder area, we're going to go over that in a second. These guys are killing it. Not just them. Single family home builders. Did you see the numbers yesterday? They're killing it, right? You guys are still buying homes left and right. Nonetheless, you got a consolidation near highs and otherwise really strong stock attempting to break out. Looking over to Marriott, same sort of thing, a little bit tighter of a pattern. Technical traders like that a little bit more. Marriott obviously doing well. We look at Xylem, it's the same thing. It's a tricky one, right? Maybe consolidation up near highs, maybe rolling over. I don't like when they have these really big short-term moves that get you to that point. Just creates a little indecision. Ingersoll, also same thing. There's a lot of these patterns. And now these are tough. Let's do a few more and I'll explain why. A couple more. They made new FI made new highs today. So you got Pfizer. I don't even remember them changing their ticker symbol, but it has changed. Same thing, breakout here. Don't know if you chased that, but something to watch maybe going forward of a stock that's otherwise very strong. And you can see that the patterns are the same. Gartner is the same thing. So it's the same look, right? If you're going, this market's not going to stop. It's going to keep going. Everybody's going to be happy. We're going to have this great momentum behind the market. You're looking for things like that. It's kind of not the time to pick on the weak links because why? What's going to cause people to take money from the winners and put them towards the losers or temporarily the losers? Nothing for at least a little bit, right? When do we do rebalancing? When do most people do rebalancing? Quarterly, right? So at the end of the quarter, you usually see that. So if you're one that says for the next couple of weeks, I think it's going to go good, it's going to be a great thing, you're looking at stocks like that because that's all you have to choose from. Anything else out there, you're just hopping on already overbought momentum. So it gets to be a little bit different. Now, if you're a contrarian, you're looking on the other side, let's come up with a few names there. I don't know, had a little extra time today. Stocks you might look to take some profits on, reduce the size, not add to them. I don't know. I can't tell you what to do. If you look at 3M, very extended. In the short term, it's had a great run after earnings there. It continues to be exciting. It's just now meeting a known technical area. They call it major resistance. So a little bit of maybe an overbought scenario there. If you look at something like NRG, energy continues to be the leading sector for the year. Just one of the reasons why. There you go. All right. So really extended stocks do not like to be extended from their short-term average. Prices of anything don't like to be extended from their short-term average. Here's NRG, right? So we're trugging along. Everything's good. I don't know if trugging's a word, but we're going to say it. We're moving along little by little by little by little, and then all of a sudden, euphoria. We're all excited. No, it doesn't matter what the price of the stock is. I want in. Anything in life that does that, eventually people go, no, I'm not going to pay that. I think I'll hold tight. Eggs was an example until Taylor Swift got involved. We've talked about this in real estate. We've talked about this in financials. Anything that you look at in life that does this, you real quickly go, that's a lot more expensive than about the average that people have paid over 20 days, 30 days, 50 days, whatever you want. And you start seeing that. See a little bit of holding back there. Volume starting to go down. Less buyers. More people won't chase it there. Anyways, that's one of them. Valero is another one. If you're a contrarian, you don't believe this stock market's going to continue higher, you think it's going to pull back. More importantly, if you think energy is going to pull back, you look at things like that and go, well, I'd go with the most overbought one. Right? I'll take my profits on these and maybe consider go the other direction. And naturally, Marathon's going to be another one. It ranks at the bottom of all the ones I've shown you so far. But look, everything's fine, right? Normal price appreciation and then greed, euphoria, excitement, lack of care for prices that you pay for things. Okay. Speaking of euphoria, NVIDIA, how much do you think it's worth? Are we not past what you think it's worth? Pretty expensive, right? Anyways, we'll talk about diversification here real quick. Not to be that guy. We're not going to make this boring. I'll make this real quick and real simple. Okay. So let's say you have $10,000 and you've invested 50% in NVIDIA and 50% in something that's not as correlated. I'm going to use Duke Energy, right? Probably has a negative correlation to NVIDIA, meaning they don't move together one for one. Like when NVIDIA goes up, Duke Energy tends to go down a little. So those are my examples. So you got $10,000, 50% in NVIDIA, 50% in Duke Energy. I would never suggest that to anybody, but this is our example today. All right. NVIDIA goes up 20%. Duke Energy goes down 20%. You just, it didn't work out, right? So NVIDIA is up 20%. How much money do you have in NVIDIA? Huh? Now, don't you have $6,000 in NVIDIA? Yeah, right? Because 20% is the thing. You do the math, and then you end up with $6,000. Duke Energy goes down 20%. How much money do you have in that one? $4,000. Your portfolio now has 60% in NVIDIA and 40% in Duke Energy. You didn't do anything but sit back and play golf or whatever it is you do, right? So if NVIDIA at that point, at some point, right, NVIDIA decides it's going to fall 10%. Now 60% of your portfolio just fell 10%, did it not? Whereas before, only 50% would have fallen. It's one of those weird things that once you're trapped in a scenario like that, little drops in NVIDIA weigh heavily on your net liquidating value or your total balance inside of your account. And you go, what happened? This was going so well, right? You still have the 10,000 that you started with because Duke Energy went down, right? You got to be careful with this. When you get too heavy in an individual stock, find help. Right? Find a way to go outside of it. I use NVIDIA because it's a simple example here today. I'm not picking on anybody, but please, like, don't let that happen to you, because once you're in that trap and you become overwhelmed by a sizable or really highly concentrated stock position, it gets difficult. Little changes become bigger changes. All of a sudden, you had this money. You're not going to have the money for very long, right? The bulls take the stairs, the bears take the elevators. You know the old saying. There you go. Let's do the Russell 2000. Great day for this one. Actually, anything small cap beat everything else today, right? I don't care what you have. So if you're in large caps, you got dusted by the small caps out there. Small cap value stocks got all the attention today, but mainly the index itself got a lot of buying, and that's just interest rates. Stability in the belief of where interest rates will be for the rest of the year helps small caps, right? Borrowing costs. Not as good for them. Microsoft can borrow whatever they want. There's all kinds of financial levers they can pull. Ollie's Bargain Outlet down the road, you can't borrow like Microsoft can. He can't continue to grow his business like Microsoft. So that's why you see small caps just having a great day here today. And well, that's awesome. So NASDAQ also hitting new highs as well. Gold, if you see gold, it's impressive. You know, it's a decent move there. Bonds actually starting to stop from going higher, at least the rate on bonds. And again, that's just stability, right? We just saw all those dots on the chart. The dots suggested what we thought they would suggest. There was no change really. And so we're good to go, right? Nobody's complaining. Hey, Bitcoin. Oh, I don't talk about Bitcoin often, but saw a really interesting study. Did you know that in Bitcoin, 80% of the gains so far this year, which, I mean, that's a lot, right? Look what's going on. It's like a rocket ship, right? 80% of the gains came after hours, not during the day. They came while you were sleeping. So there's this argument that like Bitcoin's in this mood and the stocks do this every now and then as well, where if you actually just bought near the close of the stock market day, not Bitcoin, the close of the stock market, 4 o'clock Eastern, and then you sold it when the market opened, you'd actually have a 31% return. Whereas if you bought Bitcoin when the market opened and you sold it when the market closed, you'd only have about 8%, right? Really cool. This tells you all the excitements after hours there. That's what it is. Hey, real quick, let me just show you this here. Housing numbers. I don't know if you saw these numbers. It's just absolutely on fire here. This is really, really crazy. So this is scary. Don't let it scare you. What we're looking at is the housing numbers that came out yesterday. I just put them all on a spreadsheet. We have permits, housing starts, homes under construction, call it something else, and then homes that are complete. Okay, let's take a look. The new permits for new builds, right, both multifamily and single family, just take a look. Year over year changes here, right? Single family year over year change as a whole, breaking it down by region. They do this. I didn't do that. 29% higher. Whoa, okay. Right. Multifamily, not doing so well. This is the weak spot, right? Okay, just follow it over here. So year over year change in single family permits. I've applied to do a permit to build a house. I whatever whether it's a builder or it's you, up 30% basically. New housing starts up 35% year over year. What? Look at these people go. It's crazy. Look at the homes under construction. There are less. That's actually good news. Why is that good news? Because look, the number of homes that are completed, they're done. Right? The homes under construction, we got a little bit of a lag there. What's that do? It brings prices higher. You can't just hop into a house that's being built and I'll pick it up in 3 months or whatever. No, but we have homes that are getting started. We have people applying for homes. These are darn near record numbers. I just thought I'd point that out. Where is the weakness in real estate? You guys guess it. Yeah, I mean, you can. Commercial real estate. The data that came out yesterday. The blue line, 90-day delinquencies on commercial-backed securities. Loans basically made for commercial buildings. Right? They're coming due. 90-day delinquency rate basically at a high. Almost perfectly at a high. Yeah, it's not going well over there for the commercial people. So careful if you're looking around for any, well, I don't know if you're looking to buy that stuff. So let's move on. Stocks in the news. This just warms my heart, right? Warms my heart. Ready? I'm sorry. I'm not picking on you guys, but look at this stupid SMCI. We just talked about this. The performance of a stock when it's announced that it's going to be added to the S&P. Always better than when it actually goes into the S&P. Look, 2 days ago, goes into the S&P, falls apart, right? Careful with these. When you chase stocks that are rapidly moving higher, you better rapidly be able to get out of that stock. I love seeing this because somewhere out there, you guys can admit it. You don't have to tell me if you want. Maybe you post it. I don't know. Somewhere out there, somebody's learned their lesson. Hopefully with still a profit or whatever, but very, very cool. Remember, bulls take the stairs, bears take the elevators. That's how that works. Now, the company's not stupid. These guys are not dumb. These guys are doing the exact AMC playbook. Remember that? Oh, AMC, oh, to the moon, whatever. It's going up forever. And GameStop as well. They said, shoot, we were only worth $300. You telling me we're worth like $850? Hey, let's sell more shares, right? I would do the same thing if I was a CEO. I'd be pounding the desk going, sell, Mortimer, sell the shares. So $875, they're selling 2 million shares. That's like $1.7 billion, right? Thanks to you guys. You want to chase it there? It's the AMC playbook. Don't lie, you do the same thing. All right, moving on to other stocks in the news. Then I'll take your questions if you have any questions. If not, that'd be weird. Boeing, going to slow down the production of their 737. They got issues. It's no surprise. I don't have to tell you that. Chipotle hitting new highs there as well. So this is, a $2,900 stock. So let's just use the calculator. There you go. You can see it. $2,900 divided by 50. It's going to be a $58 stock. Right? They're going to do a 50 for one stock split. And this will, it's not approved or anything. They just announced that they're going to try to get the board to approve that. That'll take place in June is what they're hoping for. Intel riding some waves here today. They're just obviously happy to get some money. $8.5 billion from me and you are going to Intel thanks to the CHIPS Act. There you go. It's your money. It's where they've decided to put it. Other than that, you have some stocks reporting earnings. Darden Restaurants, Winnebago. It's always kind of interesting to look at them. After hours tomorrow, the attention will be on FedEx, Nike, and Lululemon. You guys know why they call it Lululemon? Lululemon is I would joke about it, but Lululemon. You know why they call it Lululemon? Cody, do you know why they call it Lululemon?
No, I don't have a clue.
All right, you got somebody, we got a leaderboard here?
You can have 5 people if you'd like, yeah. Yeah, we got Peter, Andre, Tone, Janessa, and Greg.
Wait, Peter again?
Different Peter, I believe.
Yeah.
Peter L was the last one. This is a little bit different. It's
Are there like
A.
5 people playing this game?
No, we got a good amount of people playing this game.
Okay.
We got a good amount of people playing this game.
All right. I mean, I'd take the money.
Yeah. I mean, I'm not comparing it to yours.
Do you play the game?
Well, we can't win the game, right?
We can play the game. We can't win the game.
Yeah, right.
Clearly stated in the rules.
Yeah, exactly. I'd probably win most weeks. Wouldn't be fun for most people.
You know. All right. You're going to go with that, huh? Gonna be that guy. Hey, if you have no idea what I was talking about here today, maybe you ought to check out Haley's channel, Dove Straits on YouTube. She can tell you everything about the beginning, basics, like just walk you slowly through it, and in quick little bite-sized videos. I'd also like to mention, for those of you that know or don't know, Jazz Wealth is officially the financial services partner of Drum Corps International. So if you're a fan of the activity, you'll be seeing us everywhere this summer, something I'm really passionate about. Been supporting them for a couple of years, made a call. I was like, hey, I just, can I be like there? And the guys go, yeah, sure, we'd love to have you. So we are officially now signed, sealed, and delivered the official financial services partner of Drum Corps International. Hope to see you out there this summer because I'm going to be going to a bunch of shows. We'll be doing giveaways, fun videos, and things like that, all to come. All right, questions. We got. How do we? Oh, I got to. It's my fault. You got to pull it out here, and go like this. There you go. Kirk said, man, inflation's never going down. Kirk's bummed out, man. Everything costs more. The packages are smaller. Oh, don't beat yourself up over it. You'll be fine. I do think inflation will be going back up. Because you can plot this out. We'll make it a thing. I'll share it with you. There's only 2 scenarios where inflation keeps going lower, and we're not going that way. So inflation, just get ready. You're likely going to see that number start to go a little bit higher there, which is why I don't know about this 3 rate cut thing, but we will see what ends up happening there. Yeah. SCHD, what you doing with that one there? So that's an ETF. 2024 reconstitution, no, that should be done. Don't they do that? Well, they could do it in the first quarter, I guess. I thought that might have been done already. Hold on. These things. Maybe not. Okay. No. Yeah. All right. Maybe not something to be interested in for the moment there. Yeah. Pandemonium's got a guess the Dow. It's probably this way, right? The trouble is that's where my guesses would be. Y'all would make fun of me if I played the game because you'd be like, he don't know. What is this guy doing? The Dow 30, basically 40,000. Oh, get your celebration hats ready. All right. The Dow 40,000 coming up. Ooh. All right. Hey, again, no show tomorrow. I'm lucky enough to be going to see Mr. Pat Metheny. Try to take a picture with him, share it with you when we get there because doing that thing. That's all I got. Anything else over there? No, it's all good. Hey, by the way, I don't stand on a freaking stool. Right? There's nothing down here. I don't need people thinking that. Anyways, we're campaigning for clients here at Jazz Wealth. And here's one of Eric's pieces on me.
Dustin Tibbetts is not a real leader in finance. A real leader in finance would never swear on a live show. Dustin Tibbetts definitely has.
F***ing is down 67% in the United States. In the U.S., almost nobody is f***ing anymore. Isn't that incredible?
A real man in finance doesn't need a step stool for the closing beat. Dustin Tibbetts definitely does. Eric W. Powell is a real leader in finance. Eric Powell, a leader with a servant's heart, having served his community as a firefighter for many years. Eric W. Powell doesn't need a step stool to record his videos. Eric W. Powell, a family man who loves a dad joke and would never have to be censored on his own channel. A vote for Eric is a vote for decency.